Kangmei Pharmaceutical was one of the largest pharmaceutical companies in China, particularly dominating traditional Chinese medicine. The company, in just 2 decades of operating, grew over 4.1 billion US dollars, or 26.5 billion Chinese yuan in annual sales by 2017. At its peak, Kangmei had a market capitalization of over 100 billion Chinese yuan, approximately 15 billion US dollars, making it one of the most valuable pharmaceutical companies listed on the Shanghai Stock Exchange. Yet, Kangmei Pharmaceuticals would result in China's biggest ever pharma scandal. It led shockwaves across the entire country and had many international investors place doubt on the promising future of China's pharma industry. But before we get to know how Kangmei created the biggest pharma scandal, let's first understand who Kangmei Pharmaceutical is and how they grew to such heights. Kangmei Pharmaceutical Corporation Limited began its journey in 1997. The company was founded in Puning, Guangdong Province, with a focus on manufacturing and distributing herbal medicines, particularly TCM products. Its early vision was to integrate TCM into modern healthcare, tapping into both the domestic market's long-standing cultural attachment to traditional remedies and the emerging global interest in alternative medicines. In just 5 years, Kangmei had grown so fast that they had gone public on the Shanghai Stock Exchange under the stock ticker 600518 in 2001. This gave the company access to capital that allowed for even faster expansion. By enlisting in the Shanghai Stock Exchange, they had raised their profile and given it the financial means to pursue large-scale projects, including infrastructure development and acquisitions of other pharmaceutical companies. Through this, they went on to quickly build a reputation as a reliable producer of TCM, appealing to both traditionalists and modern healthcare providers in China. But what led to Kangmei's overall growth was the Chinese government. The government had a policy to support and promote the TCM industry. The Chinese government has long viewed TCM as a vital part of its national healthcare strategy, particularly as it seeks to blend modern healthcare techniques with traditional practices. In the early 2000s, the government implemented a series of reforms and supportive measures to encourage the development of commercialization of TCM. These included favorable regulations, subsidies, and support for modernization of the industry, such as by setting quality standards and encouraging exports. Kangmei took full advantage of these policies by aligning its corporate strategy with the government's initiatives. It positioned itself as a leader in the healthcare and wellness sector by combining the traditional appeal of herbal remedies with the efficiency and scalability of modern pharmaceutical production. Kangmei's success was not just limited to production, it also developed an integrated business model that included a distribution network, ensuring that its products reached pharmacies, hospitals, and consumers across the country. Throughout the 2000s and 2010s, Kangmei embarked on an aggressive expansion campaign, both domestically and internationally. It pursued acquisitions to broaden its portfolio of products and services and increase its market presence. For example, in 2017, Kangmei acquired an 80% stake in a Guangzhou-based medical firm for a value of $3.6 million. One of the company's most ambitious projects during this period was its investment in TCM planting bases across China. By securing raw materials through its own supply chains, Kangmei reduced dependency on external suppliers, driving down costs and increasing the consistency of its products. Kangmei invested in large-scale herb plantations, ensuring a steady supply of high-quality ingredients for its production lines. Kangmei also expanded into healthcare services, including the construction of hospitals and wellness centers, aiming to create an integrated healthcare ecosystem. These facilities would promote the use of TCM alongside modern medicine, thus extending Kangmei's reach into healthcare delivery. Kangmei's success in the domestic market also fueled its ambitions to expand internationally. Recognizing the growing global interest in herbal and alternative medicines, Kangmei sought to position itself as a leader in the global TCM market. It focused on exporting its products to overseas markets where there was significant demand for natural and herbal remedies. The company participated in international exhibitions and made efforts to standardize its production processes to meet international quality standards. By the mid-2010s, Kangmei Pharmaceutical had become a titan in the pharmaceutical and healthcare sectors, posting impressive financial results. The company reported robust revenues year after year, with net income growing steadily. In 2018, the company reported annual revenues of over 19.3 billion Chinese yuan, approximately $3 billion, and its stock was a popular investment on the Shanghai Stock Exchange. But it was at the same year that Kangmei Pharmaceutical would start to crumble. In December of 2018, the Chinese Securities Regulatory Commission, CSRC, launched an investigation into the company after noticing irregularities in its financial reports. The investigation revealed that Kangmei had been involved in falsifying its financial statements for several years, inflating its revenue, its profits, and cash reserves by billions of yuan. The most significant of these discrepancies involved the company's cash reserves. In 2017, Kangmei reported that it had approximately 88 billion yuan, or around $13.5 billion in cash. But the CSRC investigation revealed that only 34 billion yuan, around $5.2 billion, actually existed. This massive overstatement of cash reserves was achieved through the creation of fake transactions and fraudulent documentation, which allowed Kangmei to present itself as a financially healthy and highly liquid company. In addition to overstating its cash reserves, Kangmei also inflated its revenues and profits. For example, the company's 2017 annual report showed revenues of 26.5 billion yuan, approximately $4.1 billion. But these figures were later found to be significantly exaggerated. Kangmei used these fraudulent financial statements to maintain investor confidence and secure additional financing, both from banks and from investors, which enabled the company to continue its operations despite its actual financial difficulties. One of the more damaging aspects of Kangmei's fraudulent activities was the misuse of company funds through unauthorized related party transactions. The investigation revealed that Kangmei had transferred large sums of money, around 88.7 billion yuan, or approximately $13.6 billion, to entities controlled by its executives without proper disclosure or approval. These transactions were not properly recorded in the company's financial statements, and the funds were often used for purposes unrelated to Kangmei's business operations. The exposure of Kangmei's fraudulent activities had immediate and severe consequences for the company's share price. Once investors became aware of the financial irregularities and the scope of the fraud, Kangmei's stock price plummeted. From being one of the most valuable pharmaceutical companies listed on the Shanghai Stock Exchange with a market capitalization of over 100 billion yuan, the company's stock value sharply declined, wiping out billions of yuan in market value. In response to investor outrage, Kangmei faced China's first-ever shareholder class action lawsuit. In November of 2021, a Chinese court ruled in favor of the investors, ordering Kangmei to pay 2.46 billion yuan, around $385 million, in damages. This landmark ruling was a significant development in China's legal landscape, as it marked the first time that a court had awarded damages to investors in a class action lawsuit over corporate fraud. As the investigation into Kangmei Pharmaceutical progressed, several of the company's top executives were held accountable for their roles in the fraud. The most prominent figure in the scandal was Ma Xingxian, the company's chairman and one of its co-founders. Ma, along with other senior executives, was found to have orchestrated the fraudulent activities that inflated Kangmei's financial performance and allowed the company to continue operating despite its underlying financial struggles. In January 2022, Ma Xingxian was sentenced to 12 years in prison for his involvement in the fraud. Ma's conviction was a direct result of his role in overseeing the manipulation of Kangmei's financial statements and the diversion of company funds to related party entities controlled by him and his associates. The court also imposed significant financial penalties on Ma, including the confiscation of ill-gotten assets, as part of the broader effort to recover the funds that had been misappropriated during the fraud. Other senior executives at Kangmei also faced legal repercussions. Zhu Dongjin, the company's former vice president, was sentenced to prison for his role in facilitating the fraudulent activities. Zhu and other executives were found to have signed off on falsified financial reports and authorized unauthorized transfers of company funds to related party entities. These actions not only violated Chinese securities laws, but also breached the fiduciary duties these executives owed to the company shareholders. The rise and fall of one of China's largest pharmaceutical companies had led to Chinese regulators to address the loopholes in the country. The CSRC introduced new measures to strengthen the accountability of auditors and increase the penalties for financial misconduct. These reforms were aimed at preventing similar cases of fraud from occurring in the future and restoring investor confidence in China's financial markets. But anyway, do let us know what you think. Thanks for watching.